Welcome back to Bite Size Business, the channel where we use financial ratios and metrics to gauge a company's financial health and compare it to similar companies in the space. On today's menu is T-Mobile. The company was founded in 1994 and bought by Deutsche Telekom in 1999. In 2012, the company would merge with Metro PCS. In 2020, T-Mobile merged with Sprint. In 2024, they recently purchased Ryan Reynolds' company Mint Mobile. The company is still a subsidiary of Deutsche Telekom, but T-Mobile USA is its own publicly traded entity. Of this entity, Deutsche Telekom still owns over 50% of T-Mobile, and they said that they have plans on expanding that ownership up into the mid 50s or high 50% range. T-Mobile now services approximately 124 million customers. Moving on to the starters, we can see that on T-Mobile's income statement, they posted revenue of $80 billion. This is paired with an EBITDA of $30 billion and a net income available to common stockholders of $10.4 billion. If we move over to the balance sheet, we can see that the company posted around $210 billion of assets in their most recent quarter, paired up with $146.5 billion of liabilities. Of that, $116 billion is composed of total debt, and this leaves us with a shareholder equity of $64.25 billion. If we move off to the cash flow, we can see they posted operating cash flow of $21.6 billion in the last 12 months, free cash flow of just shy of $10 billion, and if we open up the financing cash flow and open up cash flow from continuing operations, we can see that in the last 12 months, they have paid a dividend of $3 billion. This is a dividend they instated at the end of 2023. In 2023, they paid $747 million. A big difference between T-Mobile and some of the other telecom companies we've looked into is T-Mobile does stock buybacks. And so in the last 12 months, they've bought back $8.7 billion of stock. Previously, they had done $13 billion and $3 billion respectively. Off to the main course, we can review some of the stuff we talked about with T-Mobile. Of course, the company we looked into today was T-Mobile. They trade under the ticker symbol TMUS, standing for T-Mobile USA. They're in the telecommunications industry and posted revenue of $80 billion. This is up slightly from 2022's number of $79.5 billion. EBITDA has grown strongly since 2022, up to $30 billion compared to the $20 billion they did in 2022. Net income has also grown greatly, sitting at $10.3 billion in the last 12 months, the highest out of the telecom companies we've reviewed, while their net income in 2022 was only $2.6 billion. Except for AT&T, that was the lowest. AT&T had a bad year that year and actually lost money. Their total debt is also lower than their competitors, sitting at $116 billion. Assets also are lower, sitting at $210 billion. This leaves us with $146.5 billion in liabilities and the lowest shareholder equity of the big three at $64.25 billion. Free cash flow is also the lowest, coming in at just shy of $10 billion, which is up from $7.75 billion in 2023 and a loss of free cash flow of negative $520 million in 2022. When we look at buybacks, we can see that T-Mobile has done the greatest amount of buybacks, doing $8.7 billion in the last 12 months. Before that, they did $13 billion and $3 billion. Just in the last year, they have done more buybacks than the other two companies combined. They do have a lackluster dividend, though, only returning $3 billion to shareholders in the last 12 months in the form of a dividend. This compares to the $8 billion out of AT&T and $11.2 billion out of Verizon. Taking a look at the ratios, we can see T-Mobile has a debt to equity of 1.8, a debt to EBITDA of 3.87, a high EBITDA margin of 38%, and the highest net profit margin at 13%. They have a 88% buyback percentage of free cash flow, and 84% of net income goes to buybacks. Their CAGR for revenue is 0, not seeing much growth, but for EBITDA is 22%. The free cash flow number doesn't really have a CAGR because it was negative, but they have seen good growth in that space. Looking at the comparisons, we can see that T-Mobile has a high debt to equity and a high debt to EBITDA, but a high EBITDA margin and a high net profit margin. They've also returned the second largest amount of capital back to shareholders, largely due to the huge buybacks they've been doing in the last 3 years. Due to this, I am going to give them a yellow light because their numbers aren't good enough to get a green light, but they're not bad enough to get a red. The high debt to equity and high debt to EBITDA are a little worrisome, but they have a very high EBITDA margin and a net profit margin nearly twice as much as AT&T and Verizon. Going back to some of the ratios, we can see that they post a debt to EBITDA of 3.87, which is slightly higher than AT&T. AT&T was a couple years ago the worst in the debt to equity, debt to EBITDA space out of these companies, but they decided to do a fundamental shift into paying off that debt as much as they could, and so that's why they spun off Warner Brothers and they cut their dividend a little bit to pay off more debt. And it has been working as they have seen great returns both to shareholders since and in stock price. The dessert section is always sweeter if you're a shareholder of the company, and T-Mobile is a particularly sweet one. Total buybacks in the last 3 years come in at just shy of $25 billion. Buybacks as a percentage of free cash flow in the last 12 months were 88%, and of net income it was 84%. Total dividends are low, coming in at $3.8 billion, but they did just start paying that within the last 2 years. Their dividends as a percentage of free cash flow come in at 30%, and as a percentage of net income at 29%. Their total distribution of dividends and stock buybacks in the last 3 years is $28.6 billion. If they would have been paying a dividend in the last 3 years like they did last year, they likely would have taken first place, as that would have given them roughly another $6 billion of distribution. T-Mobile also takes the first place when it comes to total distribution as a percentage of EBITDA in the last 3 years, paying out 37% of their EBITDA back to shareholders. When it comes to total distribution as a percentage of free cash flow, it was 118%, and as a percentage of net income, it was 113%. Looking at the shares outstanding graph of T-Mobile, we can see a few things. We can see the jumps in shares outstanding from their acquisition of or merger with MetroPCS, as well as their merger with Sprint, taking them from almost 200 million shares in the early 2010s up to the 1.2 billion shares that they're sitting at now in the early and mid 2020s. One thing to note with this is that as of the current moment, Deutsche Telekom, which is the owner of T-Mobile USA, owns over 50%. And so if I look at the holders section that Yahoo Finance publishes, and specifically look at the insider roster, we can see that of the about 1.2 billion shares they have, 670 million are still owned by Deutsche Telekom. This is something to keep in mind because it means that out of all their shares, only 50% are likely to be traded. But if I go back to that ownership, we can actually see that a large number of shares are also owned by institutions, which are also likely to have low turnover, meaning that a very, very small amount of shares are actually in true float. That just means that there are shares that are available to be publicly traded on like a daily basis. This kind of leads us into the check because the fact that so many of their shares are still owned by an outside entity that is a controlling interest, such as Deutsche Telekom, means that they're likely influencing the company in a way that directly benefits them. And so one of the theories I have on why they've done so many buybacks in the last few years, as we can see going from a peak of 1.26 billion shares down to the 1.17 billion they're sitting at now, I believe that this is likely pressure coming from Deutsche Telekom trying to have T-Mobile buy back stock, whether it's buy back some of their share or buy back from institutions or the current float, so that Deutsche Telekom owns a larger percentage of the company. In a way, if Deutsche Telekom owns half of the company, if the company's done over $20 billion of buybacks, about $10 billion over the last 3 years has gone from T-Mobile into the hands of Deutsche Telekom, because the appreciation of the stock Deutsche Telekom owns is appreciating by half of what T-Mobile is buying back. And so that could be something to watch because Deutsche Telekom might be having them buy back stock to increase their ownership so that they can do a full acquisition later, because T-Mobile is currently worth nearly twice what Deutsche Telekom is. T-Mobile's current market cap as of the filming of this video is sitting in at $283 billion. But if we look at Deutsche Telekom, we can see that they are sitting at a market cap of 152 billion, which doesn't make much sense, saying that their ownership of T-Mobile is nearly that amount. And so an acquisition of T-Mobile could take them from a $150 billion company to a $400 billion company and likely make them the largest telecom company in the world at the time. And so that could be something to watch and be interesting to see that actually happen and how that would affect T-Mobile shareholders and Deutsche Telekom shareholders over in Germany. I really hope you enjoyed this video on T-Mobile USA or enjoyed the other videos in this series. If you did, please feel free to like, comment, and subscribe below. And if you have any suggestions on other series I could do or other companies you want me to do, that could be a standalone video, please let me know in the comment section below. One series I'm interested in trying is looking at the top couple companies by market cap from each US state. Some states, such as Alabama, don't have many publicly traded companies, only having, I believe, 3 that are publicly traded and of a size to actually report on. While you have some states like Ohio that have over 10 or 20 publicly traded companies, including 2 companies in the Dow Jones being Procter & Gamble and Sherwin-Williams. And so that's one that would be interesting to compare. It would be a nice long series, and I feel like it'd be enjoyable to see some of the large companies based out of each state. Again, I hope you enjoyed this video, and thank you for watching.